Hello and welcome to our monthly catch-up with Shawn Burns, the Portfolio Manager of CIE, the Contango Income Generator Fund. Shawn, thanks for joining us.
Pleasure, Peter.
Tell us how you've been, treating the market over these challenging weeks and months.
Yeah, well, it has been challenging. I think for CIE, I think it has been an interesting and challenging period. When we look back, we like to think we've got a defensive portfolio, and in the first couple of weeks of this downturn, that proved to be the case. We were holding up reasonably well, but then during March, as the restrictions spread and economic activity dived, the portfolio was impacted quite severely over March.
Okay, so talk us through the composition of the fund and how the stocks within it have responded, and also we know there's been a lot of capital raisings as well. How has the fund interacted with those challenges?
Yeah, that's an interesting question, Peter. I think we do hold a lot of REITs, so the old listed property trusts, infrastructure, utilities. Utilities have done well. They've probably done exactly what we thought they'd do. They've held their values quite well. But the other two have been impacted a lot. So what are we talking about here? We're talking about shopping centres, airports, toll roads, casinos, all dropping value as the restrictions on activity have impacted even those defensive earning streams that we hold those companies for. And I think especially the REITs, as we go through this period where, sharing the burden with retailers in terms of rent, their share prices have reacted quite negatively to that. I think too far, and we're seeing some very cheap REITs at the moment, but we need to work through that.
Are you therefore cherry picking some of these stocks that you think looks like fantastic value because the news has been at the worst over the past few weeks?
We always move very methodically and cautiously. We are looking at all those stocks, and we wanted to see the market stabilise a bit. But we think that we're certainly not sellers. We're buyers. We will pace our buying into these and spread our buying across these various stocks, and also into the capital raises that have occurred as well.
So what's your outlook for dividends for CIE?
CIE, I think that's always a matter for the board. I think that the next dividend looks fine. Into fiscal 21, it will depend on the markets. If we do get a recovery, I think that's the dividends will look okay into the next financial year. Of course, we do need the markets to pick up, and that probably all goes back to how long these restrictions are in place, how high the infection rates stay. Do they start declining? They look promising at this stage, and then I think it becomes a case of infection rates down, economics constraints ease, profits start to get back up, and the stock market will take that quite well if that's the way it pans out over the rest of this calendar year.
Shawn, you've been involved in LICs for a long time, for a young bloke. And so do you find when there are market devastations like this that the reaction to LICs can be over the top on the downside, but then once the worst is past, you see a rebound?
I think that's true, and I think the reason is because they're very much retail products. It takes the mums and dads probably go through their realisation, their selling phase. They wait for things to stabilise, wait for a little bit of good news, and then start to re-enter the market, which is probably a delayed reaction to they want to see good news coming before they start buying LICs in particular. So you see that LICs do lag the upturn a bit.
Yeah.
Because
okay, mate. Well, let's keep the fingers crossed that this market misery is over shorter than some doomsday merchants have been predicting. Shawn Burns,
Thanks, Shawn.
CIE, thanks for joining us.
Thank you, Peter.